So today we're here to talk about data. We're talking about getting data on-chain, getting data off-chain, and why it's such a hard problem. But first, I just want to give all of our panelists a chance to introduce themselves. So, Tongtong, why don't you go first?
Hey everyone, is everyone enjoying Barcelona? Woo! Yeah. I learned a new word, it's called siesta yesterday. Supposed to be taking a nap right now, so I hope everyone's awake for our panel. And I'm Tongtong, I'm the co-founder and COO, not the CEO.
Oh, sorry,
it's okay. for Ember Data, we are a digital asset data provider for a lot of institutions out there. So what we do is that we index, ingest on-chain data that's, you know, every block, every transaction, every function call inside the EVM, providing that in the API for institutions to build on top of it. And at the same time, we also connect to all the top centralized exchanges as well. So from spot, futures, derivatives, all the trading data, order book. So we provide the comprehensive view into what's going on, right? If you want to trade digital assets, you want to understand liquidity, price, VWAP, TWAP, as well as, you know, top the order book on decentralized exchange as well as centralized exchange. It's very important to have the full picture to understand the fundamental data behind digital assets. So that's what we do.
All right. And now, yeah, Michelle, please tell us, why are you here today?
Why am I here today? I'm Michelle Tang. I'm head of business strategy at blockchain.com. I work across the consumer and institutional buckets, and I work on the venture side as well. I'm here today hoping to find awesome teams, so if you're building a company, please come talk to me. And just give a little background on blockchain.com. We were founded in 2011 as a block explorer, and then we diversified our products after that. We have a non-custodial wallet, 80 million wallets, 38 million verified users. We've also built up our institutional business. We do structured products, we do lending, we do OTC. I actually have a very exciting announcement. We just acquired Autonomy, which is one of the leading and most trusted OTC desks based out of Singapore that focuses on long tail assets. They're here today, so let me know and I'll introduce you to them if you're interested. And then on the venture side, you know, we're really focused on infrastructure, layer one, you know, basically anything interesting. So come talk to me. Thanks.
All right, yeah, Mike, send us home.
Sure, yep. So my name is Mike Cahill. I work for Jump Crypto, but I'm a director of the Pyth Data Association. So this is the association that's dedicated to advancing the Pyth network, which is a decentralized Oracle network that specializes in bringing high-fidelity financial market data on-chain. And the way that it does this is directly from first-party sources. So there are over 50 first-party sources that are nodes on the Pyth network. These include large trading firms like Jump, Susquehanna, Jane Street, many others, as well as large exchanges, including FTX. There's 3 regulated US equity exchanges. And so each one of these companies submits their data directly on-chain, where it is then aggregated and disseminated out to projects who get to use it and compose on top of it. There's a number of mechanisms in there to make it even more safe and secure, as well as a staking program. And so we're really excited to be here. Avalanche is one of the chains that Pyth is being deployed on via the wormhole. We would love to meet people that are looking to compose on top of it or have a need for an Oracle. So really excited to meet some of you.
And I add, I think Ember Data is also a provider in the Pyth network.
Yes, absolutely.
Yeah. So like I said, we're here to talk about data. And the first thing, you know, I'm not sure if anybody here, you know, is a developer, business side, we want to try to speak to all these folks. So I want to make sure that we're starting out by kind of contextualizing like why this is such a hard problem. And I titled this panel, Probably the Truth, because I think when it comes to looking at this on-chain data, it is crucial that we're looking at the proper numbers. And you can't have financial data being ingested into the chain that's flawed, because when prices are misquoted, that's when you have flash loan attacks and people who are able to steal large amounts of assets, which is super important to keeping our DeFi ecosystem solvent and, you know, running and keeping everyone's funds safe. So just in your own words, like, why do you think, you know, data is such a crucial problem for either getting it on chain or extracting it from the chain? technically, business level, whatever you can speak to.
I'll go first, since that's my blood, sweat, and tears every day dealing with data. So if you really think about, what is a blockchain, right? Blockchain is essentially a decentralized stateful machine. It keeps the state. So it's easy to see what's the latest transactions being confirmed, what is the latest account balances, what is the latest happening. But it's not really good for analytical in the long term. So for historical, data, for example, taking Ethereum for example, right? If you're running a full node, it only keeps like 128 block, if I'm correct. So what happened 129 block ago, you don't know, right? You can't really correlate that easily. And then the full archival node for Ethereum, I think today is approaching 11 terabyte, if I remember correctly. So it's incredibly difficult, and it's like no-brainer for, it's non-starter, no, it's not no-brainer, non-starter for anyone retail or even institutions to get access to data, let alone it's not indexed, it's not searchable, it's not queryable, it's very difficult. So that's what we do. We take that data out, we process that, index that, store that, so that you can understand what's your liquidity pool position, what's your impermanent loss, what's your fee, what did you trade, can you even do tax? I know, I suck. I said that T word. So can you even do tax on your DeFi trading? So that's why it's so important. It's difficult to do.
Yeah, I can share a very personal anecdote related to that of, I'm trying to do my taxes right now. And not all of the tokens that I've traded in the past year are listed in CoinMarketCap to get historical prices. So if I need to get the on-chain price of something from February, it's a giant pain, and you need services. I certainly can't go and just query the chain for this particular block. What was the price of this token? It's very hard to do, and so you need services, and it's also just inefficient. So if you actually have to read the entire chain, and it's too much data to keep all at once, and to retrieve quickly. If you need to have a high-performance web service, if you want to build the Facebook or the Amazon of Web3, you need to be able to index all of your data very quickly. You can't wait for 5 seconds for your query to resolve. It needs to be instantaneous.
And I think there's not enough sort of service providers that are providing this for startups too, or for, it's just very, very hard to query from on-chain. And then I think part of that is just the way that the data is stored. And so one solution that I'm looking at that's taking a novel approach, but they're actually converting on-chain data to Postgres, and they're putting into IPLD blocks, and then you can actually generate cryptographic proofs. Because another problem is, how do you actually know the state if you're not generating cryptographic proofs for everything that you're pulling off-chain?
Yeah, that's a great point. Again, we're getting back to probably the truth. We have to think about, if I'm not going to ask the chain directly, if I'm going to ask Amber for what was the state on there, how do I know that Amber is telling me the correct answer? And so it's a very tough problem of, well, now do I just remove all of the trust assumptions that we've built by building these distributed systems on chain, by talking to some party who is independently verifying the data, but I can't see that for myself.
So the answer to that, sorry.
Yeah,
Quickly,
so how does Amber
we
do that?
provide the Merkle proof in our API. So when you request the API, we actually give you the Merkle proof. You can compare that with on-chain to make sure the data has not been altered.
Yeah, that's perfect.
Yeah, and the only thing I would add, I agree with everything that you guys have said. The only thing I would add about the importance of data on chain is there is such a big paradigm shift between Web 2 and Web 3. When you start getting into smart contracts, it's easy to make parallels to Web 3. It has very similar, Web 2 has very similar interfaces. If you were to ask someone to write a smart contract that's super simple, right? Let's say that we bet on the outcome of the Barcelona football game. If one person was submitting the price, okay, right, they're going to be biased if we had something in it. If I'm submitting the price and we had this wager, I'm going to be biased to say that it's the outcome that I was looking for. But the intuitive answer is well, yeah, just that seems archaic. Go look on the internet. The internet has got all the information. That's how we would resolve this today. But I don't think that's right. I think that the biggest difference is the fact that within smart contracts, you can lock tremendous amounts of value. And this high liveness, high accuracy state that you don't get from Web 2 is really the difference. So everyone here can remember a time where any major Web2 company has gone down, either Slack or Facebook, Amazon, and it's been a little annoying mostly. Like sometimes it hurts productivity, but mostly it's kind of annoying. But everyone can think about the last time that this happened. If that were to happen in a smart contract, you now have got billions and eventually trillions of dollars that are at risk. So the stakes are not even like much higher. It's incomparably higher for Web3 to have accurate data. And kind of relying on a Web2 solution of getting data does not scale. And that's what we kind of stumbled upon with building Pyth, is that this needed to be a solution that could scale, that had checks in place so that the data could be coming from enough sources, decentralized, have a staking mechanism in the event that it were wrong, because this, the stakes are just so immaterially different.
And this is not a hypothetical problem. This is something that actually happens. So, for example, I guess the real fundamental reason why maybe this is so hard is because all data in a smart contract needs to be consistent. You need to have every node in the network agree that this data is this data and it doesn't actually evaluate to something else. And so because of that, smart contracts can't just reach out to the internet. They can't go and just get data by themselves. They actually have to have data fed to them, because if we were just to make a call to the internet of like go to what's the weather at this API, that might return a different answer if I'm in China and my query was blocked by the Great Firewall versus if I'm in the US or something like that. And so we can't have people come to different conclusions about the weather, what the weather was. So instead, you have to follow a paradigm where I'm a weather data provider and I tell everyone that's listening to my smart contract what the weather is. And so I just will consistently publish updates. Today, 70 and sunny. Tomorrow, rainy and 50. Barcelona, rainy every day. And then later I'll push in some different data. But to get to Mike's point, the reason this can get very hard also, especially when it comes to denial of service or just lack of availability, is when there is a financial crash. And for example, when the price of Bitcoin or the price of Ethereum, the price of Avalanche just starts going way down, there is all kinds of market activity starts to happen. All kinds of trades need to happen. And for something like a lending protocol, where determining whether the loan is still fully backed or not is of the utmost importance, you need to have that valid price data. And sometimes the network can be so congested that it's actually impossible to get accurate Oracle price data in all the time. And we've seen these kind of denial of service attacks happen on chain just due to competition. And it puts these protocols at real risk, because people can't necessarily update their positions or liquidate stale loans. And it's a very stressful event for the network, and it's something that Oracle providers need to make sure never happens. And I think Avalanche actually solves some of this and makes a lot of it easier because of our scalability and our low transaction fees. It's a lot easier for transactions to land on chain, even in high demand environments. And I think we've seen this through some of the more tumultuous price movements from the last few months. Avalanche has actually held up very well in this regard. And I don't think we've ever had an inability for oracles to put data on chain, which has been super helpful for all the dApps on the platform. Yeah. So now I kind of want to talk about a little bit why, we've talked about why this is hard, but I guess what excites you most about being in this space? And I guess why, for any like young developers, or people looking for a new job, why should they choose this space over going into building dApps from scratch? Or what's your pitch for just why this is the most exciting piece of the Web3 stack to work in right now?
Yeah, I think that the landscape is so vast. So if you distill it down, and Bitcoin is kind of a ledger, and it's given us this consensus on who owns what. And then Ethereum has introduced smart contracts, and then there's been platforms that allowed for smart contracts to scale. That's really what enables Web3. And I think that when you hear about the people quitting in droves, they're doing from FANGs, from Web2, they're doing so because they're excited about what is being issued as like protocols that can have technology and self-sovereign currencies that allow for mutually distrusting parties to contribute to a common goal. Those all require some sort of reference data. And there's a few narrow cases where that reference data can be all fully embedded, right? Like an AMM could be just one single smart contract. It looks at the balances of one side, looks at the balance of the other side, and you've got the X, Y, K curve. But every other smart contract platform will require reference data of some nature. And that's what the Oracle space provides. It links together in a trustless way the ability for a smart contract to have a execution surface that's outside of a singular smart contract. And it's really, really powerful. So it's, to me, the analogy is kind of like building the GPS service for the iPhone. It's, at the one hand, it's kind of an unsung hero, but it has empowered things like Google Maps and Uber. It's one of the largest enablers in this space, which we think, at least I think, we're at an incredibly early time. We're seeing so much innovation, but we've got lots more to come. And building on the rails of a really powerful data network or Oracle service is very rewarding and gives you a front row seat to see a lot of this innovation happen. So that's why I think it's incredibly exciting.
When I found Ember Data, that was almost 5 years ago, I'm a data geek. I spent my whole career working with data, managing data, mining data, indexing data. And I was fascinated by Web3 development and crypto and smart contracts. So for me is, how do I apply what I know and can get involved in crypto? And that's when we start Ember Data. And I think it keeps me very excited and every day motivated to build, because this is absolutely fundamental. There's nothing more fundamental than data infrastructure for people to be able to build and trade and create applications. What did they say? If you don't have data, you'll either be lucky or wrong. So, and people need data to build applications, to trade, to understand, to measure risk, right? If you just think about the institutions I work with, even simple things like stablecoin. You want to understand the true supplies of stablecoins across different network. You want to understand the price peg variance. How often does it vary from the dollar it's pegging? And you want to understand the different liquidity risk and market risk. And if I'm holding so much of something, and by there's a liquidity event, I need to dump something. Is it gonna cause the price crash? There's so much data that's needed to understand the space and to build on top of it. And we talk about oracles, right? So Ember Data, we've been working with different oracle solutions for the past 3-4 years now, and we today power about 600 million calls a month on Chainlink network. And because we have DEX prices as well as centralized prices, we're very unique. We can provide both price feeds. And then now we're working with the Pyth network and also API 3 and Flux protocol, launching first-party Oracle as well. So we're in the space for real. And if you're a data geek like us and you want to get into the crypto space, come talk to us. We're hiring in all areas.
What that speaks to me is that everybody who just got a data science degree in the last 5 years and is now pivoting to crypto, this is this is where you need to go. So, yeah.
So one application I think that's really interesting is sort of with the rollout of 5G, and you have like the Helium network, you have Pollen, you have all these sort of different, I guess, platforms, and I think the most interesting use case for that is IoT. And so that's where oracles come in, is that you actually, like with sort of the rollout, the decentralized rollout of 5G, because it's more economical for ISPs or the traditional large service providers to actually support the decentralization, the decentralized rollout. But what you're creating is a bunch of, you're able to actually measure machines and all these things, and so you're able to actually do it immutably on chain, and so you actually are tracking that data, and it changes the game, and then you're actually able to underwrite different types of insurance, and there's all these like knock-on effects. And I think it could also like impact people at a socioeconomic level too, so people can kind of be part of this new sort of Oracle economy?
When it comes to data, most people are focused on price right now, and I think this is where it's all about the price feeds. When you're talking to Chainlink, it's all about, can I get my token listed in your price feeds? But there's a lot more to data in general than just financial data, and there's even don't have. So I guess what do you guys want to see? What kind of data do you want on the network?
Yes. So one of the things that we were thinking about when the Pyth network kind of came together was, how are we going to get highly regulated financial market data on chain? So if you think about like the US equity market or the US futures market, about 5 to 10 years ago, most of the large exchanges changed their business model so that about 25% to 50% of the revenues were coming in the form of market data. It's about a $5 to $10 billion a year business. And we thought that there's a requirement to get that data on chain in order for Web3 to really thrive. Otherwise, it's going to be hamstrung. And one of the things we realized was it's probably not going to be the NASDAQs and NYSEs of the world that are putting it on chain. So we looked to find people who had ownership of their own data that they could submit themselves. And that's really why the Pyth network has found this group with really an idle data source that is being utilized for the first time. So places like Jump Trading trade sometimes thousands of times per second in a particular instrument. That generates a very high fidelity market data feed that Jump owns and can then stream out. And the same thing happens with the Susquehannas, DRWs, Hudson River. And you end up creating this alternative source of data for this really, really difficult to access kind of walled garden set of real-time US equity data that's being submitted on chain. So we think that's really unique to the way that Pyth has been constructed. And we really like the idea that you can find data that has typically been inaccessible to builders and making it accessible to the vast majority of people on a blockchain, a permissionless blockchain, so that anyone can have access to it. So that's what we're excited about. The majority of the Pyth users today are using it for crypto data. There are a few that are using this for equities and futures data. We expect that portion to grow over time. And we are excited about the types of apps that people will build that will stitch together the traditional and the crypto markets.
Personally, I love sports. So, yeah, DeFi is cool and all, but like, I want my sports betting apps. I'm sorry. On-chain fantasy football, especially in the United States, where I think sports gambling has really been eased up. The restrictions have been eased up in the last few years, and we see kind of the prevalence of that in culture rising again. I want to see sports apps. So if anybody out there would like to work with some of the oracles to get these sports apps, I will totally support you. So another kind of question I wanted to ask is, where is the innovation happening right now? Is it happening on Ethereum? Is it happening on Avalanche? Is it happening on the other alts? Like, where do we see the biggest experimentation with oracles and indexers right now?
A lot of innovation today, I would say, is in the DeFi and DEX space. I was just at ETH Denver, and you can hear all the conversations as you stay in line for COVID tests or stay in line for the buffet table, and everybody's talking about, oh, I'm launching a new DeFi protocol, I'm doing this. I think that in general is in DeFi space, and Avalanche being an EVM compatible chain, I think that's brilliant because that makes it very easy for people to port the protocol to Avalanche because the fees are so much more manageable, and so you have a better transaction and scalability. Yeah.
I think there's just a ton of infrastructure that needs to be built, and I've just had a bunch of conversations with different teams, and they see it as a huge strategic differentiator to actually be building their own sort of homegrown querying solution. And I think that over time, I'm hoping that'll go away because that's not what I think they should be focused on. So hoping that'll change.
I think I want to know them because they should use my service.
I'll introduce you.
This is what Avalanche Summit is all about, making connections, closing deals.
I would just add, Avalanche is where all the excitement is.
Yeah, that was the right answer I was looking for. But yeah, so I mean, we've talked a lot about some of like the technical challenges, but I'm also really curious like what other obstacles you guys are running into from like the business side, the regulatory side, and just like, well, I guess what are the obstacles we have to solve?
For us, it's really keeping up with different protocol development, right? So we're working on support Avalanche as well with the blockchain data, and it's hard. What we do is really, really hard to do it right, because people always say, hey, it's all open source, the data is available, like, why do I need to pay Ember Data to get the data that's already publicly available? The same thought you can apply to Google. All Google is indexing public web pages, that's all clear text. Why do you use Google? Because it's hard to build something that's searchable, that's usable, and that's like our value as well. Like in order to provide the SLAs we do for our customers, in order to also have uptime and accurate data, reliable data, I spend millions of dollars infrastructure bill so that we can have all the redundancies and processings. It's difficult to do what we do, and I always joke, right? At my next startup, I'm not doing data business anymore because this is so hard. And but the truth is, I love what I do, and I'm probably still going to be doing something with the data. So.
Yeah.
Yeah, I'd say that the biggest challenge we have is focusing on making sure that the data is very fast and very accurate. So the strategy that most Oracle networks will have in order to ensure accuracy almost inevitably will add some sort of a latency delay. So they're going to look for consensus to be driven by having more of the feeds that they're kind of scraping from update, and then only publish the price at that point. And that's not really the objective for the Pyth network. It wants to be kind of first party, but be as streamlined as possible. And so there's a couple of ways in which Pyth prioritizes for speed and for accuracy. So the first one is to have a high enough distribution of publishers. There's 50 today, including Ember, of course. And that's pretty good. The second component of it is each of the data publishers publish both a price as well as a confidence interval. And so that's really useful because in real time, if there's a wide divergence of consensus among prices, as we all know, if the price in Bitcoin is very volatile, or there are capital controls in a particular country, like kimchi premium could be quite high, and you can have a dislocation of South Korea price versus, say, US price by like 5%. At that point, there's no single right price for Bitcoin. The Bitcoin price is going to be X, plus or minus this 5% spread. And so this is kind of the second component that allows for fast update times and a more accurate price that can be used in a protocol natively. And then the third component of it is staking. So each one of the data providers will be required to stake or post a bond on behalf of the accuracy of their pricing. In the event that they're incorrect or they're maliciously pricing, they're going to be slashed. And so this looks much like a validator network. There's delegators that can back up the individual quoters as well. So I'd say that's the biggest challenge. We're rolling these things out now, but making sure that it's robust, accurate, but very fast is really what we're trying to prioritize. And it's not an easy thing to solve for.
Having high fidelity data is really, you have to work with the first party providers, do first party Oracle. Otherwise, you're not going to have the high fidelity feed, because if you think about any type of consensus mechanism, there's two things, liveliness and consistency, right? And it's really difficult to achieve. If you want everybody to agree on this price, you're not going to be lively. You're just not enough updates. So having a consensus quorum is not really the way to go when you want financial trading high fidelity data, because you just have to find the reliable source to give you the data so you can execute on, and with staking, right, essentially, to guarantee the price is right.
And it really is quite interesting how many similarities there are between building a layer 1 network and building kind of a decentralized Oracle network, because it's a very tricky problem, because like we were mentioning earlier, if I'm asking somebody who won the latest football game, if that person has a financial stake in what the answer is, they could very easily lie to me. So how can we build these trustless systems? How can we build these systems that are verifiable. I mean, it's an incredibly challenging problem that I don't think anybody has solved. Even the major Oracle providers, you're still having some degree of trust with them. There is no purely trustless solution today, and it's an incredibly open problem space. And I would encourage anybody interested in this to really dig into some of the products in the ecosystem, because you'll learn a ton by figuring out how they work and by looking at all the products that are on stage today. But yeah, I just we're about to wrap up, so I just kind of want to take a moment to thank all of my co-hosts today. And I want to give you each a moment to shout out your Twitter, your Telegram. Where can people reach you if they're super excited and want to hear more? Yeah.
You can follow me on Twitter as Gong T2, some Tongtong T square, Gong T2, and Telegram the same way as Gong T square. And we're hiring, so very interesting to get anyone that want to work on the fundamental data infrastructure.
Send me an email at michelle@blockchain.com.
On Twitter, I'm mdom Cahill, and the Pyth Network is just at the Pyth Network on Twitter as well.
And so yeah, and then on Twitter, I am DAS_Connor, DAS_Connor. They gave me this giant stage, so I got to give some plugs real quick. So I got to say, you can also follow me on YouTube on my podcast, Subnet Show. But yeah, no, I just want to say, thank you all for coming out. I mean, this really is the best part of Avalanche Summit, is getting to meet all of you, the community. And I've been having a wonderful time, and I want to shout out our event coordinators, Jade and Jay, for putting on such a fantastic show. There's so many great talks coming your way, and it's all because of them, and you're having such fantastic builders in the community. And we're just so excited to have you here. So if you're interested in hearing more from me, I will be on a panel again tomorrow. I'm giving a workshop on getting started in smart contract development for all skill levels. So hopefully I'll see some of you guys there. Do you guys have anything else you want to shout out before we go? All right, well, thank you so much, everybody.